Let me ask you something. Have you ever stopped and wondered why money feels so powerful, even though you rarely see it? I mean, really think about it. Most of the time, money isn't even physical. No gold. No paper. Just numbers, promises, trust. So where did that power actually come from? Pause for a moment. Because the story of finance is not a story about greed. It's a story about organization, about human behavior, about trust being written down and enforced. Let's go back. Long before banks had buildings, finance lived in memory. People remembered who owed what. But memory fades. And when memory fades, conflict begins. So humans did something radical. They started recording value. In ancient Mesopotamia, people stored grain and silver in temples. Why temples? Because temples were trusted. And trust is the first currency. Imagine being a farmer back then. You deposit grain after harvest. You receive a record. That record means survival during famine. Now ask yourself, is that really different from a bank account? Those clay tablets weren't primitive. They were revolutionary. They turned trust into a system. Then came Babylon. And here, where things get serious. The Code of Hammurabi didn't just talk about crime. It talked about loans, interest, collateral. Why would a king care about loans? Because once money moves, power follows. And uncontrolled debt destroys societies faster than war. This is where finance stopped being personal and became institutional. Move forward to Egypt. The Egyptian state controlled grain like a central nervous system. Grain flowed in. Grain flowed out. Records tracked everything. People didn't trade sacks anymore. They traded claims. Think about that. They weren't trading food. They were trading rights to food. That's finance. Then came Greece. And something new appeared, risk. Sea trade was dangerous. Storms. Pirates. Distance. So bankers stepped in. They didn't just hold money. They financed uncertainty. Ask yourself, would global trade exist without risk being financed? Rome understood this deeply. Roman bankers handled payments, loans, and settlements across the empire. Roman law backed contracts with force. That combination, law plus finance, built an empire. But when Rome fell, the financial system collapsed with it. Coins disappeared. Trade slowed. Wealth froze in land. That tells us something important. Finance doesn't just support civilization. It is civilization. Now shift east. During the Islamic Golden Age, merchants created systems to move money without moving metal. Written payment orders. Profit-sharing partnerships. Why? Because carrying gold across deserts was dangerous. Information traveled safer than currency. That idea alone changed history. Europe eventually learned the same lesson. Italian city-states became financial engines. Florence, Venice, Genoa. And here, where I want you to pay attention. They didn't conquer land. They financed power. Kings borrowed from bankers. Wars were funded by credit. And bookkeeping, yes, bookkeeping became a weapon. Double entry accounting sounds boring. Until you realize it made financial deception visible. Every gain had a cost. Every credit had a debit. Transparency creates control. Then came something even more dangerous. Shared ownership. The Dutch East India Company allowed thousands of people to invest together. No single ruler. No single owner. Risk was divided. Reward was scaled. That's not just business. That's a shift in how humans cooperate. And once shares could be traded, money gained a new dimension: expectation. Markets stopped pricing the present. They started pricing the future. Central banks came next. Governments needed money. Banks needed authority. So they merged interests. The Bank of England didn't just print notes. It stabilized trust. Paper replaced metal because trust replaced weight. Now think about the Industrial Revolution. Factories didn't rise because of ideas alone. They rose because capital could be gathered, measured, and deployed. Railroads were not built by savings. They were built by belief in future returns. That belief was packaged as bonds, as shares, as promises. Of course, when promises break, systems break. History showed this brutally in the early 20th century. Markets collapsed. Banks failed. Trust evaporated. So regulation appeared. Not to destroy finance, but to keep it alive. And that's the pattern you should notice. Finance expands. Then it destabilizes. Then it restructures. Over and over. So let me ask you this. Is money good or evil? Or is it simply a mirror? Because history shows us one thing very clearly. Money amplifies structure. It rewards discipline. And it punishes chaos. Finance is not about getting rich fast. It never was. It's about understanding systems, flows, incentives. The people who shaped history weren't always kings. Often, they were accountants, lenders, and investors. Quiet people, writing things down, making numbers agree. That's the real story of money. Not noise, not hype, structure. And that story is still being written.